Yeah, and I think it's really, really something we're seeing often now where there are a lot of creative ways to get to the goal, right? So again, not a one size fits all. Even every offer is different. Every home is different. Every seller's motivation is different as well, right? Why are they selling? What is their time frame? What can we work with, right? And just keeping in mind, everyone's trying to do a deal at the end of the day. We're trying to find the best sort of win-win scenario for everybody. It's not a matter of I win, you lose. It's not a zero-sum game. It's like we're trying to purchase this home and they're trying to sell it. We're trying to find the best way that everybody wins, right? So, and what I've uncovered a lot this year with these new buyers is like there's so many different ways we can do this, whether it be sellers motivated to help with a credit to buy down the interest rate. That's a really cool thing we're seeing often, especially in kind of a slower market right now, right? We're not seeing things fly off the shelf right now.
They're sitting a little bit longer.
Absolutely. Yeah. And people are still wanting to sell, so it's like, what can we do to make happen? And if someone has, hundreds of thousands of dollars in equity, like, can they part ways with 12 grand to like help this buyer get into this situation that's a little bit better for them?
Hi, everyone. I've got Justine Jardine Prouty with me, and she is part of the Whipple Group based out of Long Beach.
Yep.
Thanks for joining us, Justine.
Of course. Thank you for having me. This is super exciting.
Cool. Yeah. So I figured we'll get started. You're a newer real estate agent, right?
Yep. Just about a year in.
Why don't you just tell us a little bit about your background, what got you into real estate, and I'll let you take it from there.
Cool. So, I come from a pretty aggressive sales background. I've been doing, sales, business development, and a lot of team building, funny enough, most of my career. So I really was interested in real estate really from the get-go, but never really had felt like there was the right time to do it. So, the past couple of years, my husband really kind of encouraged me. He's like, hey, we don't have children. This is kind of the right time to like make this big change. And at the time, he was actually opening his own business as well. So he's a civil engineer and he was kind of branching off doing his own thing. And, there was that element of like entrepreneurship that we, were both excited about. And so we decided to basically just do it at the same time. And I figured there's really no better time than now. And, it was really the best decision. I joined a team actually starting in December, and that's where the Whipple Group is. And we're based out of Long Beach, and small female team. There's only 6 of us. And, together we do 50 to 70 transactions a year, and we're the number 1 team in the brokerage, and it's been such a fun, amazing learning experience. And it's just kind of hit the ground running and rock and roll. So,
very cool.
Yeah.
Well, I was glad to get connected with you.
Yep.
I got to work on the buy side, right? Yep. Representing the buyer, doing their loan on a transaction, and Beatrix was the seller's agent, right? And I don't know if she told you about that transaction or not, or if you heard about it. It was very challenging because of the new rules regarding the balconies with condos.
Yeah, definitely.
And it was like moving mountains to get that one closed.
For sure.
And it was no fault of any of the buyers, no fault of the seller, no fault of the real estate agents or me or anybody. But it took a lot of work, and it took a village. And I don't think I've ever actually spoken to a seller on the phone as often as I did with the seller.
Okay.
Just trying, because they were obviously trying to help out to get what we needed, right?
Forward,
so that we could satisfy the requirements for the financing. It all worked out great in the end.
Awesome.
And then I got to be connected with you, and here we are.
Yeah.
So
awesome.
Very cool.
Worked out.
So I know you're newer in real estate.
Yep.
It sounds like you've been working with a lot of buyers, right? A lot of probably first-time home buyers as well.
Yep.
So we're going to kind of try to gear this towards, maybe some questions that first-time home buyers have, right?
Yep.
And, educating them on like what it takes to, get their foot in the door in real estate.
Totally.
Yeah. So what are some common questions, I guess, that you get from buyers, right off the bat that, you think would be, relevant to everybody else out there?
Totally.
Yeah.
I think the main thing is, where do I start, right? What is step one? So I think we all have generally kind of the same idea of like, we want to buy a home, we want to buy something. I think that's a very common goal for most people. So, then we get to this point of like, okay, we really are ready to take these steps, but are we really ready? Like, what does that look like? And then really like the preparation process. So I think oftentimes we see people start a little bit backwards where they, we meet a lot of people in open houses that are already kind of exploring the market, going out, which is super fun and exciting. But we find out a lot of times they haven't even had a numbers conversation, or they don't really know what they can afford. What is the budget? What makes up their mortgage? Things of that nature. So it's really, I find really important to understand those steps. And maybe you don't have to do it in a specific order, but it's definitely good to know those things so you can prepare. And one thing I've noticed is most people I've worked with, in that first-time buyer realm, like the preparation is like the most important thing. It's like 90% prep and 10% actually pulling the trigger on a property. So I think just getting somebody prepared for that and ready and making sure that they are in the know of all the things, like that is like 90% of the battle. So yeah, definitely.
Totally. Yeah. I know I've noticed a lot of people enjoy the fun part of real estate. Hey, let's go out on the weekend and look at all the cool open houses.
1,000%.
Oh, but I got to talk to a lender.
Yeah.
Oh, I got to talk to a realtor.
Yep.
Oh, I got to sign a buyer broker agreement. Oh, that's making this really real now, right?
Absolutely.
And it's a little scary.
Yep. For sure.
So, and then a lot of people don't know where to start, like you were saying. So maybe let's talk about that a little bit, because from my perspective, I always tell people, and it doesn't always work out this way, as you know, because most people don't meet a lender first unless they just think to themselves, I got to go walk into the bank to get pre-approved.
1,000%.
Right. Yep. Like my business, for example, is referral based. My number one referral source, realtors. Right. So, and then of course, past clients and whatnot. But yeah, people don't normally think like, oh, I got to get pre-approved first. So they may walk into the open house first.
Yeah.
That's fine.
Yep.
As long as they're being pointed in the right direction of, hey, if you want to actually explore this, you're ready, you want to be ready to go, you really need to get your financing in order.
Yeah.
And it's not, I mean, there's a lot of reasons for it, right?
Yeah.
It's not just to be like, oh, I found a place, I got to have a pre-approval letter.
Yeah.
But also just to know where you stand.
Absolutely.
Right? So, I mean, you might have an idea like, oh, this house is $1 million, right? I have 20% down. Maybe I have a little less, whatever it is.
For sure.
But you have no idea what the payment's going to be.
Absolutely.
And you don't know if that fits into your budget at all.
1,000,000%. Yeah.
Talking to a loan officer that's going to help you through that and not just like view you as, oh, here's a loan, let's get it done.
Yeah.
But like strategize with you.
Yeah.
Especially first-time home buyers, they may not be ready right off the bat. Right?
Absolutely.
But if you can, strategize with them and talk numbers and game plan and figure out what's going to work for them, then they can go from there and they can actually narrow down their search to what is going to be, something that's going to work for them.
Absolutely. And I think even just to add on that too, anything could be accomplished, I think is really the thing that we want to keep in mind. If somebody wants to buy something, it can happen. It's a matter of like what can be done. So I think a lot of times when you're walking into an open house and you're excited and you're like, okay, this is $1 million property, like I'm in Huntington Beach, I'm in Long Beach, wherever it may be, the question is, can we afford it, right? So number one, is this even right for me at this current time, right? Or right for my family and situation? So again, running through those numbers and understanding like, what does that mortgage look like? And are we ready? Do we need to take extra steps to get to that point if this is really the goal, right? Now, for some people, when they have that conversation, they find that, hey, maybe the $1 million house is not it right now. Maybe it's something a little under that, or maybe we need to change our strategy, right? So maybe it's a $800,000 house that makes way more sense for us, like mathematically. Then we start looking at where can we find an $800,000 3-bedroom, 2-bath, or fill in the blank, what's important, right? So part of that is just like understanding that things can be done, but what is the strategy? What works best for you? And then like part of why you work with a realtor and a lender is like to kind of put together that puzzle, right? And try to formulate the best way going forward for your particular goal. So sometimes it feels scary and it's exciting and all the things, but it's like that is the crucial step to, understanding what works best for you and like what you're trying to accomplish. Right?
Totally. So, yeah. And then, of course, finding the right people to work with, especially that fits with your personality as well. Yeah. Because, I mean, let's be honest, not everyone is going to jive with us, right? Yeah,
totally.
But you definitely want to talk to someone, because I know, especially on the lending side, like, I mean, loans are a necessary evil.
Yeah, sure.
Sometimes there's a stigma with loan officers that they're just salesy and like trying to get you to do something or get you to commit. Or doing like a bait and switch or whatever it is, right? Totally. When it comes to lending and all that, like advertising constantly, go into debt, right? So I want to talk to someone that's not just a loan officer, but more of like an advisor. That can look at the whole picture of what you're trying to accomplish, not just, oh, yeah, I can qualify you for an $800,000 loan.
Yeah.
And then we're going to fund the loan and never talk to you again.
Yeah.
But actually ask, so what do you plan on doing with the property?
Yeah.
What are your goals? And I know those can change, but that definitely helps narrow it down. And it comes across not so much like, what can this buyer bring to the loan officer for a payday? But it's more, how can the loan officer add value?
Yeah.
And if it's from that standpoint, then maybe it doesn't feel so, doesn't make the buyer feel so pressured.
Yeah.
Right.
Absolutely.
And like, that's always my goal when I'm talking to clients, is I don't want them to feel like they're pressured.
Yeah.
That they have to apply right this second.
Yeah.
I'm trying to get their application in so that they've got some skin in the game with me.
Totally.
You know, like that kind of a thing. But just have like a normal conversation with somebody. Yeah. And same thing on the real estate side, right?
Totally.
Because there's so many people in our industries. You kind of have to weed out, the bad ones, so to speak, 100%. Right? Yeah. And that seems to be a challenge, because again, it does make it more real for someone, or it feels like, oh, like I'm making some sort of a commitment by talking to a lender or signing an agreement now that has to be done, right, with a buyer's agent, right?
Yeah. Absolutely.
So is that something that you see a lot with buyer's agents as well? Or sorry, buyers as well?
Yeah, absolutely. I think the thing I think people are mostly afraid of, or really, that's not say afraid, but what our jobs are is to educate, like, number one. So it's just to help someone prepare for a goal that they have. And I think what people get afraid of is that sort of level of commitment of, like, if they talk to a realtor or a lender, they are committing to something right now, and right now may not be the time, right? So, but we don't know what the time really is unless we really have the discussion. So it is kind of going backwards. So I think for me, at least, my ultimate goal in talking to someone about anything real estate related is just to figure out what they're trying to accomplish, right? Very similar to you. And okay, well, are we ready for that piece, right? Or do we have certain steps that have to happen, or do we need to go backwards a bit, or do we need to re-strategize? Is this something we're doing in 3 months? Is this something we're doing in 3 years, right? Yeah. So there's lots of moving parts in the middle that need to be uncovered. And, I think that's, a good agent, in my opinion, and a good lender are going to help you kind of come together on those things. And again, not make you feel pressured, because a lot of times we are talking to people and then 2 years later we're doing a deal, or a year later or whatever it may be, right? So because it just wasn't their goal, it wasn't the right time for it. We needed more things to happen. So, so I think that's an important piece. Is just, and then when someone's talking to a lender and a realtor, my advice always is to interview them, right? So it is a big job. It's not a small job by any means. I mean, this is likely the biggest purchase someone's going to make in their entire lives. They might do it twice, at best. But, unless you're an investor, you're doing this multiple times. You've got a team. You're kind of putting together a team is really what you're doing. So,
absolutely,
right?
Yeah.
And you want to have someone that you feel good with. And not every realtor lender is going to be the best fit for every person and what they're trying to accomplish. So, and, they might be able to get the job done, but it's more about, in my opinion, the vibe. And do you work well with that person? You're going to be on the phone with them a lot. Sometimes even every day you're on the phone. And I often joke that, like, when I'm done with an escrow, it's like I'm losing a best friend for a short period of time, because we were talking every day. But now it's like we're talking every week or every month just to check in. But you're really putting together a team. And that team, again, is here to help you with the common goal. And we don't know the goal if we can't have a discussion about it. So, not being afraid of that piece. So.
Yeah. So it's, removing that barrier, so to speak, of like, oh, I don't want to commit or whatever, but just kind of, that, I think it's really great, the point that you made about interviewing. Yeah. Right. And that's totally okay. Yeah. Right. Yeah. Go talk to as many people as possible and see who you work well with. Yeah. Right. And, I've had countless clients who are, like, oh, you're the third or fourth loan officer I've talked to today, because they asked their realtor for numerous referrals, right? Yeah, absolutely. And sometimes I'll win them over. Yeah. Maybe they don't even get to calling me because they talked to someone they really liked on the first call. Good to go. Whatever it is, right? For sure. It's good to get different perspectives from different people. Yeah. And see who you work well with, because the goal, and like what my goal is always for buyers is. Even the smoothest escrow transaction can be very stressful. Absolutely. So I don't want to add to that stress if I don't need to. Yeah. Right. Absolutely. And the way that I can help somebody have the least stress possible is making sure they're as ready to go as possible when they open escrow, and they know exactly what the process is, and just kind of educating on those kinds of things.
Yeah, absolutely. And I think it's a good segue into like readiness in general of like, when someone does find that they want to work with you and they want to move forward, like, I would be curious if you want to kind of talk a little bit about the steps that you have in place to kind of help someone get ready. We don't have to dig into the finite of like how we kind of qualify someone, but there's crucialness to that piece, because at least I can only speak on the realtor side, but when we're ready to submit an offer and we're ready to go, we need a pre-approval, we need proof of funds. There may be an offer deadline, we need to be competing or ready to go. So, it's important to prepare, interview, get your ducks in a row, get your people ready to go, and then, making sure you have everything ready so you can submit. So, so I guess in your opinion, like, how do you help someone become prepared? What are your steps?
Yeah, I mean, I on a normal situation, right? Nothing that's like rushed last minute or whatever.
Sure.
Like a buyer walking into an open house and wanting to offer right away.
Yeah.
Do those too.
Which we've seen,
Yeah, that happens. Knock out a pre-approval in an hour.
Yeah.
But, if it's someone that's just getting started, depending on what their goals are. I mean, if they're actually wanting to look right now and they're like, hey, if we find the right place now, we want to be ready to go.
Cool.
Okay. Let's talk numbers. Let's talk everything. Let's get an application in.
Yeah.
I always tell people, like, we'll do soft credit checks on pre-approval.
Sure.
So, hey, this isn't going to be a hard inquiry on your credit report, but it allows me to see your liabilities and allows me to see your credit scores so that I can place you in the correct loan program.
Yeah.
Right. And then, obviously find out, like, hey, what do you have to work with, the down payment?
Sure.
And then especially now that rates have been higher for a few years. Yeah. We do talk rates, obviously, because that does matter. But more importantly to me, I ask them, what kind of a payment are you comfortable with?
Yeah.
Don't want you getting into a home and so stressed out over the payment that you can't sleep at night.
Yeah.
Right?
Absolutely.
So payment really at the end of the day is what
matters. Most important thing.
Yeah. And of course, we have to be competitive with other lenders and all that, and that's fine. But we really talk monthly payment and then, get their pre-approval ready to go. Yep. And once that's ready to go, as soon as they need like a specific pre-approval letter they're going to offer, we send those over. But really, it's just talking numbers, talking goals, timelines as far as like, hey, what do you anticipate? Like, what's your goal with this property? Are you going to live there for a year and sell it? Yeah. Do you want to be here at least 5 years, 10, 7 years, whatever it is? What do they have in mind? And that way we can kind of tailor it to their needs.
Awesome.
Yeah.
Yeah, that's helpful to know, because I think just going through that, it kind of makes it seem so much more simple than I think people think it is in their mind.
Yeah.
Right.
Yeah.
So it's really it's a pretty simple step more than anything. It does, obviously require some paperwork and some things of that nature, which can be a little tedious. But correct me if I'm wrong. If you do it once, you're pretty good for for a good chunk of time in terms of the pre-approval and whatnot, unless things change with the job or things of that nature.
The biggest thing really would be the two biggest things are if you decide to take out new debt or you switch jobs. Which that doesn't mean it kills your pre-approval. Sure. It just I would need to update it, right? And then of course the credit report that falls under taking out new debt or whatever you're doing. Like, you want to make sure you're paying your bills on time. Yeah. Maybe don't go into more debt unless you're so solid that
doesn't really matter.
You're not overextending yourself. Yeah. Like, so whatever, it didn't affect your credit. Cool. You got a new car. You're still qualified. Yeah. That's fine. We will need to update the credit report, obviously, but we're going to do that anyway when you get into escrow. Yeah. But generally pre-approvals are good for 90 to 120 days at that point. And the nice thing too, again, with pre-approvals, going back to credit reports, I'm not rerunning a hard, inquiry every 3 months to update your pre-approval. Yeah. It's just, in fact, I won't even update it unless you're still actively looking. Yeah. Okay. Totally. Right. So, if you put things on hold, and we're not going to rerun your credit just because the credit report just expired. Yeah. I would check in with the client first, but it's just a soft inquiry, and it's just updating it, making sure everything's still good. Yep. Nope, you're still good with your jobs. Everything, nothing's changed. Yeah, you guys are fine.
Rock and roll.
Yeah.
Awesome.
Yeah. So it doesn't have to be like so strict, like, no, we have to do this, this, and this.
Yeah.
Like, it's a case by case thing. Yeah. Right. Very cool. That way it doesn't feel so stressful for the client at the end of the day. Yeah.
That's the goal. Yeah. I think, because I think the whole process sometimes can feel stressful, right, for people starting out. So I think, again, to your point, like the goal is to make it as easy and seamless as possible, and but also make it make sense and understand why these things are important. Right. So, another kind of piggybacking off that in terms of preparation. So what realtors are typically doing is really more on the research side of things. What I like to do for a client just to kind of start out is, again, understanding the goals, get them connected to a lender, understand their numbers and what they are trying to accomplish. And then we're building an entire search around that. Right. So again, depending on that, I call it the top of the funnel, right? What's the cost of house that you can afford, right? $1,800,000. Are we looking at homes, townhomes, condos, all the fun stuff? And then we're building around that. But part of that is research as well. So one thing we run into a lot in real estate is, we know that things are more expensive or quote unquote expensive, right? We live in Southern California. It's an ideal place to be. I live in Costa Mesa, so I know what my market looks like, and Long Beach as well. And, oftentimes we get someone who's like, hey, I want a 3-bedroom, 2-bath in the east side of Long Beach for under $800,000. And we're like, okay, I don't know if that's possible, right? Yeah. So it sounds great, and because that's what they can afford and that feels good for them. But now we got to look at, is that possible, right? So running and looking at the comparable properties in the neighborhood and seeing like, okay, what has sold, in that price point, right? Is that possible? Or do we need to do a couple different things and re-strategize? Like, if we need to move areas, if we need to be okay with maybe a 2-bedroom instead of a 3-bedroom. All those things are important because I think it also helps set the expectation and prepare someone. And it kind of opens up their mind a little bit to other possibilities, right? So, maybe someone is really focused on that east side of Long Beach and they're like, hey, I don't want to, negotiate that area or bargain with it. Then maybe we're looking at townhomes that are a little bit more affordable in that area. Right. So again, there's different things in terms of preparation that I think are really key points to helping someone get started, aside from also running those numbers. And then, of course, there's getting into the fun stuff like escrow and all of that. But one thing I think that's really important, I'd love to hear from you on, is tax benefits. So one of the best reasons to buy a house or a property or anything, which I think is also important to the preparation piece, is knowing how do my tax benefits help my payment, things of that nature. So I don't know if you want to kind of take that away.
Yeah. I mean, that's a good segue into like some of the benefits of homeownership, right? Like we were talking about the other day. A lot of this is why it's really important to, to align yourself with somebody that's going to help educate you. And absolutely. not just view you as a transaction, right? Because a lot of these things, a lot of buyers wouldn't even know where to begin if they wanted to, Google it or whatever, or look it up. Maybe they get further with ChatGPT now. I don't know, but it's hard to just think to yourself, and you're not even a homeowner and you're not in the business. I wonder what the tax benefits are for of owning a home. Maybe if you're a licensed CPA or something, or how does that work as far as building equity and whatnot compared to renting and all these different things, right? The tax benefits are a really big thing, especially with higher interest rates. What I tell clients is when interest rates are really low, you're saving through a lower payment, essentially, right? Because your interest rate is so low, like that's where your savings is coming, so to speak. When interest rates are higher like this, of course, your payment's going to be higher. But you're going to have a larger tax write-off. So it's going to benefit you, and you're not paying the IRS as much every year. And most people probably don't even realize potentially how much they could be saving. If you're paying like $3,000 a month in mortgage interest on your payment every month, which is pretty typical right now, depending on what your rate and loan balance is. It's $36,000 a year. Combine that with your property taxes that are probably at the cap of $10,000. I should probably preface, I'm not a licensed CPA, so this is not tax advice. But these are just, these are the numbers out there, right? You compare those types of write-offs with, your standard deduction on your federal tax return. Especially for single filers. It's way lower. So depending on what your tax bracket is in, I mean, I've had clients between federal and state save upwards of $10,000 a year on their taxes.
It's wild.
By purchasing their home. So, and that comes out to over $800 a month. Right. And that could be the difference in your mind of, oh, actually, I can afford this place. If you didn't have that deduction, then all of a sudden you have $800 less per month. It's like, oh, I can't afford that mortgage payment. And now that I'm saving all that money in taxes, cool. I'm going to go double check that with my CPA. Let them sign off on it. So it's them. They're liable for the advice. and then go from there. Whether if you're a W-2 employee or whatever it is, self-employed, you can figure that out with your withholdings so that you can afford the payment. So you're getting a big tax break there.
Yep.
Right. Along with building equity, because even if it's a small amount initially, you are paying down your mortgage.
Yeah.
Whereas if you're renting, you're not.
Totally.
Yeah.
Yeah, absolutely. That's an interesting concept too. I think we forget, well, not necessarily forget, but we don't always keep on the forefront that like real estate is an investment in the long run, right? Just like anything we invest in, stocks, bonds, the market, all the things, it's something that is to grow over time, right? So I think getting your foot in the door and understanding some of those benefits, and also knowing like a mortgage will always be more than rent, right? I mean, there's no universe that we live in, unless maybe you live in the Midwest, that your mortgage would be
Southern California generally.
Not in Southern California, exactly.
Yeah.
So, there is, I wouldn't say an element of risk to that, but just knowing like, hey, if I'm going to be in a home, it's going to be more expensive, right? But what are the benefits to that expense, right, over time? And how do I capitalize on that now, right, in terms of my tax benefits of homeownership and what that looks like, but also long-term benefits of appreciation. And, if you look at the math on like standard real estate appreciates 3 to 5% a year, whatever it may be, it's just always growing. It's always a good investment over periods of time, right? Now, different if someone is, hey, let me buy this and sell this in a year. We don't know what the market's going to look like in a year, but, it could dip a bit, it could be stronger, but regardless, if you keep it over time and, it gets better and better and better, right? Just like a Roth IRA, a stock, whatever it may be. So it's kind of the same concept, but also knowing that and knowing, hey, what kind of benefits do I have now with my tax bracket and being able to make this happen, right? To get your foot in the door. It's out there. Information is out there. The right people can educate you to do it, which is really great. So,
Yeah. And if you're in a fixed rate mortgage, for example, there's an element of stability there as well.
Totally.
One, you're not paying rent to an investor, whoever owns the property. Well, what if they want to sell the property?
Right.
And the new buyer wants you out of there, right?
Totally.
That happens all the time.
Yeah.
Also, your rent likely is going up every year.
Yeah, totally.
In a fixed rate mortgage, your mortgage is fixed.
Yeah,
so
absolutely.
Even if you're at a 6 or 7% interest rate right now, at least it's not going up.
Yeah.
It's not getting any worse.
Yeah.
And then if rates permit at some point, you can refinance and lower your payment that way.
Totally.
And things just get a lot easier. And then you also, again, going back to stability.
Yeah.
Stability of, you're in a neighborhood ideally that you want to live in.
Yeah.
And there's a lot of things that, like the pride of homeownership.
Yeah.
Setting down roots, school districts for your kids if you have them. Location for people.
Totally.
And there's just a sense of pride there, when you own the property.
Yep.
Versus if you're renting and it's not your own.
Yeah.
Right.
Absolutely.
So I mean, beyond the numbers part.
Yeah.
That's just such a huge benefit.
Yeah.
And once you get in and experience that for yourself, it's a game changer.
Absolutely.
Yeah.
Yeah. And I think it's always important to keep in mind that your interest rate today, whatever you buy with, will always be the most expensive it'll ever be, right? So your payment. So, with the consideration, and maybe there's some stats on this that maybe you can help with, or ChatGPT as well, but how many times do people refi in a lifetime? Obviously there's lots of different variables and elements, but, the mortgage you pay today is the highest you'll ever have it as. You always have a chance to bring it down once the markets are always up and down, but but again, you're paying into something that's yours, and you're paying into something that's going to build equity over time, and again, as an investment. So really, really important to, I think, kind of keep that on the forefront too. As we're looking at, the way things are at this time.
Yeah. So, yeah. I mean, the refinancing, it's a good point. It's nothing that you want to go into counting on it happening at a specific time.
Yep.
But when the market permits, being able to take advantage of that is huge.
Yeah.
It's really, really huge.
Absolutely.
Yeah.
So cool. Yeah.
Cool. I know we want to talk about a few other topics aside from the taxes when it comes to benefits and whatnot. Let's break down, I guess, what goes into a mortgage.
Yeah. Sure.
Because I'm sure you get that question a lot. Yeah. It's not just the loan with the mortgage, right? Yep. You also have your taxes, your insurance, and your HOA.
Yep.
All those things go into pre-approving and all of that.
Yep.
But it's all part of the housing payment. It's all part of the qualifying payment.
Yep.
And, sometimes people don't realize all of that stuff. Like, oh, I have to go get a homeowner's insurance policy.
Yep.
Oh, well, how much are the property taxes?
Yeah.
Is it included in my mortgage? Is it not? So on the lending side, the lingo is, you got your PITI, right? You got your principal and interest, which that's going to make up your mortgage payment.
Yep.
A portion of your payment every month goes to principal, a portion goes to interest.
Yep.
But then you may have another several $100s to out here at least, over $1,000 in what's called your escrow.
Yep.
If it's included, right?
Yep.
Depending on your down payment, a lot of times it's required for the loan type.
Yep.
But that's going to have your property taxes and your insurance in there.
Yep.
Most people, it seems, they like the convenience, right? Of just having it all lumped in.
Yep.
And then, of course, you have your association dues if you're buying a condo, right? Or a townhome, or not so many neighborhoods around here, but the planned unit developments and whatnot.
For sure.
Do you get a lot of questions in regards to like, hey, what does that mean? Like, what's the breakdown on all of that? From buyers.
Often. Yeah. I mean, it's pretty common to not really know what goes into the, until you actually sit down and talk to a lender and they kind of break down and itemize like what you actually are paying for. Right. Yeah. So it is really common. People kind of just think they're making this payment. They don't really know exactly what, culminates that payment itself. But, and even understanding things like homeowners insurance, you have to have homeowners to get a loan. Right. So what does that look like? Is that typically $100? Is it $500 a month? Yeah. What areas are we in? Where I grew up, there was a lot of, I grew up very close to the fires, right? In Pasadena and kind of the Palisades, and, homeowners insurance is a whole different beast out there right now. So preparing for that and stuff. But again, this is all part of the preparation of just knowing what makes up for it and can we plan accordingly? And then, what's interesting about HOAs, I think people forget about is, $200-$300 a month, depending on where you're at. Maybe even, down by Huntington, even more in the 500 plus, right? Yeah. So down by the beach, but
seems like that's kind of the new normal.
Absolutely.
For HOAs, yeah.
But the cool thing is we sometimes forget, like, what does the HOA cover, right? So water, trash, and typically gas, right? So like, what does a water bill on a home look like? Probably a couple $100s a month, right? So, they're covering that piece as well as like general maintenance and insurance. And like, they're not covering the internal insurance, but they're covering the insurance occasionally. Yeah, absolutely. Yeah. So it's just things like that to be, in the know of, right? So, but I think all very important things to understand as you're kind of getting into it.
Yeah,
so,
it's really good for the preparation piece because I'll get calls from people who are like, oh yeah, so I'm looking at this property, this is my down payment, and they're trying to act like they've already done the research.
Sure.
And I went on Zillow to calculate my payment, and it was this much, and I'm like, that doesn't add up with what it should be. And Zillow's calculator is so far off on the taxes. So, and I mean, not always, but in a lot of instances, like the taxes are way off. Yeah. The insurance is way off.
Yeah, absolutely.
The mortgage insurance is off.
Yeah.
The rate's off.
Yeah.
So they have like a completely different idea of what this property is going to cost them monthly than what it actually is.
Yeah, for sure.
That's why it's really important to talk to a live person who can actually run numbers on specific properties for you, pull the tax rates.
Yep.
Ideally, if they have an insurance person that they can, run a quick quote or whatever, that way you can dial things in.
Yep.
And then, because, if somebody goes online and they're trying to figure out what does PITI mean, they plug it into Zillow. Oh, cool, I can afford the payment. Let me go talk to a lender. Yeah. Why is it $500, $1,000 more a month all of a sudden?
Yeah, absolutely.
That's where the education is really key.
Really, really crucial. And I think even just to jump on that again we haven't really dove much into even like the interest rate in general, right? Like, because I think part of what Zillow doesn't do, and what I actually used to use a mortgage calculator even prior to real estate, where it was NerdWallet, I think was what it's called. Yeah, it's a pretty cool little tool, but it doesn't quite give you as much accuracy, right? In terms of like, if someone isn't putting 20%, what is their PMI going to look like? What is their interest rate? And I think that's a really important point because, a lot of people that are buying right now are looking at sort of the average interest rate, and they're thinking this is going to be my interest rate, right? So 5.9, 5.8, 6.1. And it's like we get down to the nitty gritty and like, your interest rate, correct me if I'm wrong, is determined by your scenario, right?
Right.
So
Yeah,
it may not
specific.
be,
Yeah.
right?
Yeah.
So let's talk about that. I'm curious on your end. That tends to, in my mind, change things in terms of the payment a lot of times, right? Just based on.
Absolutely. Yeah.
Right? Yeah.
Yeah.
So,
especially on conventional financing.
yeah, sure.
And then lower down payments.
Yeah.
It doesn't matter. Your credit score doesn't come into play as much if you have a really large down payment.
Sure.
But if we're talking first-time home buyers that haven't done this, haven't gone through this process before, how much do they really have saved up?
Sure.
Maybe they have family helping out, which I think we're going to chat about that
creative
a little bit later for creative financing. But, if they're minimal down, their credit score really matters on a conventional loan.
Yeah.
And if it's too low, not too low to qualify, but where it's going to really affect their interest rate, they may even want to look at a different loan product, like FHA, for example.
Sure.
But even if you have really good credit, like let's say your credit is 740, you're still paying a higher interest rate than somebody that's at 780.
Yeah.
And a lot of people are like, I don't understand why my rate is a quarter point higher. My credit score is 740. Well, Fannie Mae and Freddie Mac, they've got these tiers, right?
Yeah.
And the top tier is 780 to 800.
Yeah.
So, and then if you're below that, you're paying an additional fee for the same interest rate.
Yeah.
Or you go with a higher rate to eliminate the fee.
Got it.
So, that definitely comes into play.
Yeah.
And if you're seeing these really low rates advertised online, they're just assuming that this is a top, qualifying loan, right?
Yep. Sure.
And this quote is not for Jason Thomas.
Yeah.
This quote is for the masses, and this is the best we can offer in a perfect situation.
Yeah. Right. Like hopefully that they think about people don't fit in a bucket, right? Or I guess buying a home is not a one size fits all, right? It's not just like this product works specifically for this person and this. It's all very precise and very specific.
Yeah.
And I think to your point, like that's where people can get a little bit like a lack of information, right? It's they come in and they're excited about something and they're like, this is the payment. And then we find out that it's something completely different. And again, why it's so important to kind of work backwards a bit and start with the more crucial conversations of like, talk to a lender, get your numbers right, know what works best for you, know your interest rate. Just because somebody else has something different, they have a different scenario, so it's going to make up something different. So all really like super important things. And we see that constantly, like all the time in the field. So
yeah,
absolutely.
Yeah. It's really good to get all the information that you can in regards to that so you understand how the whole process works, right? Because, again, like you said, one person's interest rate is going to be completely different than somebody else.
Totally.
Even if you think you should have the same rate, right?
Yeah.
That's not always the case.
Yeah.
And that, again, going online, you're just not going to get the information that you're looking for.
Yeah.
Right?
Absolutely.
You may get an idea of it,
Yeah.
but it's more than likely not going to be what you're actually going to end up with, right?
Yeah.
So,
Totally.
Let's switch gears a little. I know we want to chat about some creative financing.
Yep.
And because it's another thing that people may or may not realize that they can do. But gift funds are really, really huge. And I see that a lot more now that it's more expensive to buy a home right now. But, you've got family that can gift you money to get you into a property.
Sure.
You'd be surprised what you're able to pull off sometimes, right? And that's where working with, a professional, whether it's a realtor and the lender, to help kind of coach you through, educate you on all that stuff. And look at the whole picture. Oh, wow, I didn't realize I could qualify for that. And I'm going to have a roommate moving in with me. Wow, maybe this is, and I'm getting tax benefits. And my parents are chipping in some money that, was going to be an inheritance, but they're going to give it to me early so I can enjoy it while they're alive, right?
Absolutely.
All those different things. And that's a path to homeownership. And you get your foot in the door and you get into your condo. And
absolutely.
And you move on from there, right?
Absolutely.
So that, there's ways to get your interest rate lower initially to help out, whether that's strategizing with your agent to, with your offer to maybe ask for a credit back, help buy down your rate to help you qualify. There's a number of things that you can do, right? But that you're not going to be aware of unless you're talking with a realtor who's helping coach you through all that stuff.
Absolutely.
Yeah.
And I think, it's really, really something we're seeing often now where there are a lot of creative ways to get to the goal, right? So again, not a one size fits all. Even every offer is different. Every home is different. every seller's motivation is different as well, right? Why are they selling? What is their time frame? What can we work with, right? And just keeping in mind, everyone's trying to do a deal at the end of the day. We're trying to find the best sort of win-win scenario for everybody. It's not a matter of I win, you lose. It's not a zero-sum game. It's like we're trying to purchase this home and they are trying to sell it. We're trying to find the best way that everybody wins, right? So, and what I've uncovered a lot this year with these new buyers is like there's so many different ways we can do this, whether it be sellers motivated to help with a credit to buy down the interest rate. That's a really cool thing we're seeing often, especially in kind of a slower market right now, right? We're not seeing things fly off the shelf right now.
They're sitting a little bit longer.
Absolutely. Yeah. And people are still wanting to sell, so it's like, what can we do to make happen? And if someone has, hundreds of thousands of dollars in equity, like, can they part ways with 12 grand to like help this buyer get into this situation that's a little bit better for them?
Right.
Possible. Absolutely.
Yeah.
Depending on the seller. But, that's another really interesting thing we see. And even over offering on a property, which has been a really unique scenario where somebody may come up with, let's say a buyer's got their down payment, right? They've got that ready and, 3.5%, 3%, whatever it may be. They don't have a ton of cash, but they've got that portion ready to go.
Yeah.
We also need to consider closing costs, right? Mm-hmm. So an additional 15 to 20 grand just to close on a property, right? It does cost money to buy things, right? In real estate.
Yep.
So what we're seeing sometimes is we're able to, if someone doesn't have that extra 15, 20 grand for their closing costs, we can essentially overbid on a property by fill in the blank number, maybe 15 grand, 20 grand, and we can get that back as a credit from the seller.
Yeah.
Right. So they break even, right? But it actually helps us tremendously if we don't have enough liquid cash to, move forward. Right.
Right.
So again, another kind of creative thing we're seeing often. And, that's actually something that that's great for the seller. They don't lose in that scenario.
Right.
And it also is really great for the buyer in that scenario.
It's really great for the buyer. Yeah. And you have generally three options if you are getting that credit.
Yeah.
You can put the money towards the closing costs, like you said, to keep extra cash in your pocket if you have it, or if you don't, whatever, right? You got your closing costs covered.
Yeah.
You can buy down your rate permanently by paying points. The points charged for the rate.
Yep.
Or there's also temporary buy downs as well, right? And those have to, those are seller financed as well, but you can get a break on your interest rate upwards of 3% for the first year.
Yeah.
The most common one is usually like the 2-1, where you get a 2% break your first year, 1% the second year.
Yeah.
But that'll lower your payment a lot.
Yeah.
Up front at least.
Yeah.
Or again, if you just elect to do the permanent one, then it's fixed for the duration of the loan.
Yeah.
And it's helping out your payment quite a bit.
Yeah.
Right.
Sure.
So these are all great things that and it's very specific to the individual's needs.
Yeah.
And of course, if we're involving the seller, it has to, involve the seller, them being willing to do so as well. But if you're approaching it as like everybody's coming together with a common goal, right? It makes the process a lot smoother and less stressful for everybody involved. And hopefully at the end of the transaction, everybody's happy, right?
Yeah.
But those are some great, I've seen a ton of those.
Yeah.
Where the credits are they're really bridging the gap.
Absolutely.
Help somebody get in the door and get the home that they're looking for. Yeah.
It's been really, really exciting in that era. Or at least in that area. But another thing we're seeing often, which I think is really cool, is people's interest to buy like duplex and triplexes and quads and quadruplexes, I think is what they're called, actually. Like that. Am I saying that right? Quadruplex? Is that
Triplex, quadplex.
Yeah. I usually just call them quads.
Yeah.
It sounds like a weird exercise thing. Yeah, exactly. But that's also a really unique strategy as well. Like, duplexes, triplexes, quads, they're at the same cost as a single family in a lot of areas, especially like a duplex.
Long Beach.
Yeah, absolutely. Yeah. Like, even more, I would almost argue a duplex is less expensive, in some areas to actually purchase a duplex than even a single family, depending on the type, size of the single family. But what an interesting idea to be able to, like, you are renting it yourself, essentially, like unit A, you are paying the mortgage, it's yours, and then you're renting out unit B, which is essentially covering your mortgage at the end of the day.
Yeah.
And it's, in essence, you're going away from renting to building into a mortgage that is yours. It's a property that you own. But eventually you're able to move out of it and then, build enough equity if you want to buy something different, and you can rent those 2 units and, again, cover the mortgage, right? So it's a common scenario we're seeing, and it's a common question. I mean, the financing is relatively the same, I believe. I mean, this is where you would come in this era, but or area, but unless you're not living in it, is that correct?
Yeah, I mean, I think the idea that we're talking about here is if you're occupying a unit, trying to get your foot in the door into real estate.
Yeah, absolutely.
And so you're doing that, you're accomplishing that as a homeowner, and then you're also checking off the box of an investor at the same time.
Totally.
Right? And doing property management, essentially.
Yep.
And it's really nice because you do have the separate units, whereas if you were to just buy a condo or a single-family home and get roommates, well, they're actually in the same unit because there's only one unit, right? So, that's huge. And you do get benefits because you get some extra qualifying income from the expected rent of the unit that you're not occupying, for example, or units if there's multiple. And depending on the price, if you're doing conventional financing, you still have the minimal down payments. You can do as little as 5% down. That was a recent change in the past couple of years. It used to be that you needed more. But, you can do minimum down. Same with FHA. You can still do 3.5% down FHA. Depending on the scenario and number of units, you want to talk to a lender and make sure it works because FHA does have some additional requirements. But I mean, it's huge. If the mortgage is going to be $5,000 a month, but you're renting out one of the units for $2,500, your net mortgage is $2,500 a month. Where are you going to go find something like that, even while renting right now?
Absolutely.
Right?
Yep.
So it's I mean, that's a great way to get things done as well and get your foot in the door in real estate.
There's a ton of opportunity right now in even areas of Long Beach, San Pedro, highly rentable areas is what we would call them. So Carson, Gardena, South Bay, there's just a ton of opportunity for those types of things. We're seeing them pop up a lot more often as well. So it's just something, it's something to be thinking about in terms of, again, another way to get your foot in the door. And it's actually very feasible. So,
Well, cool. I know we've covered a lot of topics here. Any final closing comments? What would you say, I guess, real quick to a buyer if they were interviewing you, versus another realtor?
That's a great question. I mean, I think it's always the most important in my mind, just again, to make sure you vibe with the person you're working with. So it's not so much a selling of hey, here's what we offer and here's all the things. I mean, I always do like to cover kind of my general standard protocol and whatnot, research, connect with the lender, and also, of course, getting you through escrow and being sort of a project manager in that way. But I think it's most important to you've got to vibe with the person and make sure that, the goals are aligned and you got to feel good with that person. Right. So no matter what, at the end of the day, if you don't feel good with that person and you just feel hey, that there wasn't that, that sort of warm, fuzzy feeling. I say the same thing when my buyers are buying a home. If you don't feel the warm, fuzzy feeling, it's probably not the one. So you got to feel really, really good about it. Trust your gut. Always trust your gut, always in anything. So, and my goal again is always just to I want to understand the goals and see if I can help get you there. If I don't feel like I can always refer you to someone else. Right. If we feel we are good on that front, then we'll kind of run through the process and, we'll see if it makes sense to move forward. So awesome. Yeah. Sounds great. Well, thanks so much for joining us, Absolutely.
Justine.
Thank you.
Your social, your Instagram, because we're going to put this on, there'll be reels and all that.
Totally.
Correct me if I'm wrong. Is it JJP_real estate?
You got it.
JJP_real estate.
Yep.
Talk to Justine for all your real estate needs.
Cool.
Thanks, Justine.
Thank you. It's awesome.